Hey, what's up guys? Omar here, broker and CEO of Alden Mortgage and Ome Realty. So I'm gonna do a super boring video. I'm gonna go ahead and tell you about every single mortgage product available. Now I'm probably gonna miss a couple of them. Not gonna lie, I try to go down the list of all the mortgage products that we currently offer. But, you know, things happen where you kind of miss a couple here and there. Some products aren't there, blah, 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 blah. I'm going to try to make this as interesting as possible. Try to make this as informational, and whatever. I'm going to try to make this as fun as possible to go down a bunch of different damn mortgage products. But it's really interesting to know because a lot of people, you go into mortgaging, right? You want to go buy a house, you want to go do something, you want whatever it is that you want to do, but long story short is, do you really know everything that's available to you? What if somebody says, no, you're not approved? Banks don't do half of the loans that I do. Let's just face it. Banks are conforming, non-conforming, jumbo, you know, your FHA, VA, USDA. That's about all they do. HELOCs, which we're going to go through all of those too, but I'm going to go out and give you some ones that you don't know about. Some of them that we do. Some of them that, especially if you're an investor. Investors, people who want to dabble into real estate, maybe you want to do a second home, maybe you want to think like, how do I know what I'm allowed to get and which one is available to me? So I'm going to go ahead and explain a couple to you. So the first one is going to be on the conforming side. Now, whenever you hear this thing that says conforming, right? Conforming just means that it adheres to the guidelines set by two of the biggest corporations out there that insure these MBSs, which is a mortgage-backed security. I sound like such a douche right now when I talk like that. But you know what? When you're in my world and the mortgaging world, this is all I talk about. I go to a party, I'm that idiot that sits there and talks about mortgage. You're like, God damn it, it's Omar again. All he's talks about is real estate. Well, I can't help myself, okay? This is all I know. I don't have a life. I got a wife, 2 kids. That's it. What else do you want me to do? Once in a while I go to the gym, have a beer on Wednesday nights. That's my life. But 30-year conforming, okay? That's your standard, run-of-the-mill, every day. There's the conforming, which sets a limit based off of the county that you're at. There's 2 types. There's one that's called a high balance. Then there's one that's just a conforming limit, like let's say it's at 647, 200, or it's at 9 and some change, 900 and something thousand. Now each county is different. Every city, sometimes even city by city, it changes the limits. Rarely, but it does. But your 30-year on a conforming high limit at the highest high balance would be like 940 something. On the regular conforming, it'll be 647, 200, somewhere around there. So that is going to be your run-of-the-mill 30-year fixed. But there's also another one. There's something that's called a high balance, which still falls in the guidelines of what you're allowed to go ahead and do with Fannie Mae or Freddie Mac. So that still means you could do 5% down. That means that the thresholds for your front end ratio and your back end ratio aren't that much. Now your front end ratio, just so you know, is going to be how much expenses that you have on your housing. Your back end ratio is going to be all encompassing. So like, let's say, I don't know, your credit card bill, your car payment, your medical bills for Susie or little Bobby's braces that you pay, I don't know, whatever it is, right? That's all of it combined into one. So that's going to be your back end ratio. Now, FHA still has the highest back end ratio at 56.99%, but jumbo is the second one, okay? So you have high balance that has that threshold, but then jumbo, you have like, it's whatever you want to go out and make it. You could get all the way up there into the multi-millions. The only difference is that you have no choice on a jumbo loan to do at least 20% down. There's no ifs, ands, or buts. I'm probably going to be wrong on that. Somebody might do something nuts that I don't know about. Banks are freaking out of their mind right now. And I'll tell you why in a little bit. Well, not really. I won't tell you. Banks are dropping rates on jumbos, and they're squashing guys like me. I'm not even going to bat an eyelash with when it comes to that. Sometimes banks right now, especially we're in November, a week before Thanksgiving, November 2022, banks are just lost their damn minds with the rates. Either that or the wholesalers that we deal with We just cannot compete. Obviously, we're going to be faster as brokers. We're way quicker than them because we don't have the X person doing this, B person doing this, C person doing this. I will literally do everything all on my own from square one all the way to the end. I will be making the calls. I don't have a processor that I have to deal with. And if I do use somebody to process my loans, they work for me. Nothing else. It's not like they won't be available to pick up my phone call. They will always be available to pick up my phone call or else they're fired. Then I don't need you anymore. Now the other 30-year FHA is going. 30 years is going to be FHA. Did I explain jumbo? Jumbo rates at banks have decreased a lot because of what has been going on with the Fed fund rate and blah blah blah. So they're trying to and purchase agreements have decreased so much. So everybody and their mother right now is hurting for business so much that they're doing stuff that's a little bit extraordinary. Like JP Morgan Chase is set to buy $1 billion worth of real estate company with a real estate investment company called Heaven, or whatever the hell is their company's name is. A small company by that means too, a small company, which is weird. But the other 30-year will be FHA. FHA is great because you could do something that's called a DPA, which is a down payment assistance. Now, don't get that mixed up. There's two things. There's a forgivable one and then a non-forgivable one, okay? So there's a down payment assistance program that is entwined with a lot of the FHA programs that we have. Down payment assistance just means that you are going to go ahead and piggyback another loan, which is going to be the 3.5% down payment, to go ahead and cover the total closing costs for that FHA loan. So you will be 100% financed. You don't have to worry about down payment. You don't have to worry about any of that stuff. Just a couple of your appraisal, your credit reporting, a couple of closing costs unless you take a higher rate, and then we could go ahead and cover your closing costs for you. So you could essentially, if the deal is right and it makes sense for you financially, or maybe even if it doesn't make sense, but you could essentially walk into a house with $0 out of pocket. Make sure you have some in reserves, but that's about it. FHA is really, really good with that. VA. Now, VA is another 30-year fix. That's for veterans. That's also a zero down payment program. You don't have to put any money down. You just need your certificate of eligibility and pretty much kind of easy peasy, color breezy on that one. USDA. This is another for rural areas. You can do zero down payment on that as well. Now we get into those kind of weird, sketchy areas. For you. For me, it's not. For you, it's probably like, oh my God, I can't believe, do these really exist anymore? This one, though, is a really weird one. Now, this is called a ninja loan, which is a no income, no job, no asset. You don't have to bring anything to the table, nothing. Your down payment, don't have to worry about your credit score. I don't give a damn anything about you. You could vest the title however you like to go ahead and invest it. Now, this is mainly for people who want to go ahead and get into, that are like seasoned investors, like people who have a pretty big size portfolio. Now there is a bunch of different other avenues that you could go to, like you could do DSCR loans, you could go ahead and do bank statement loans, you could do non-owner occupied, which is the no loan. There's a bunch of different ones, but like I said, we'll get through all of these and you can kind of see how much is actually available. Now, like I said, then comes the DSCR loan. Now, this loan is a great loan for people who want to get into the investments or season in the investment side. Now, by all means, don't look at this video and think, oh my God, I'm going to get a DSCR loan and I'm going to go ahead and use this loan product to go ahead and buy properties. No, don't do that, especially as a beginner. This is something that you're going to go on as you progress in your investing career, right? So debt service covered ratio. This is a loan product where the qualifying income is not going to be from you, it's going to be from the property. So I don't care how much you make, I care how much the property makes. And then vice versa, I want to know if that income that's coming in is going to go ahead and pay for the principal, interest, taxes, insurance, and the other running costs that property has to go ahead and cover the principal, interest, tax, or to cover, or I'm losing my mind here. For the income coming in, versus the principal, taxes, insurance, and running costs going out, does it equal? Now, for instance, if you have $1,000 coming in and you have $1,000 going out, well, that's called a 1-to-1 ratio. So you'll hear people say, like, let's see what the ratios are, let's see what the ratios are. Ideally, what you would want to be is like, let's say, for instance, the principal, interest, taxes, insurance, and running costs are going to be at $1,000, you want your rental income to be about $1,250, which will put you at a 1.25 ratio, and that'll put you in a better position to go ahead and get qualified, and it's just so much better. You don't want to mess with anything other than a 1.25. It doesn't make sense, I promise you, unless you got money, and it doesn't matter. Because what ends up happening, right? What ends up happening is, what if you go into like, you're at a 1-to-1 ratio, you're net zero on this income producing property, which is not producing shit, and then you go ahead and get they stop paying rent. Now you haven't been able to build up any reserves. That's why we stay at a 1.25 and or above. And for a lot of people that say, oh my God, you have like $30 million in your real estate portfolio, that doesn't mean you're making much money. In $30 million worth of real estate owned, like let's say for instance, I tell you right now, how much are you worth, Omar? I'm like, about $30-40 million. That doesn't mean that I'm bringing money in. That means my real estate portfolio has $30-40 million. Maybe, and for a lot of people, I have another video about cap rates and figuring out an investment property is good for you. I'll probably link it somewhere around here. If you have that much coming in on each property, let's just say for the most part, you're probably bringing in like $200, $300, maybe $400, $500. So when you have this liability of, let's say, $2,500, you're praying that you could go ahead and bring in that extra $500. That's why we have yearly increases every single year when it comes to rent. So don't think everybody who has a bunch of different houses and everything like that, they're just balling. Over time, yeah, you're balling out of your mind. And like, let's say 20 years from now, I'm leaving. You think I'm going to be making YouTube video? I probably will keep continuing making YouTube videos. Hopefully I get a little traction here. So if you did like the content, like, subscribe, comment, all that other shit. Help a brother out here. And let me put the shameless plug here. If you are interested in any of these mortgage products, link in the description below, or send a comment, or I have my Instagram. Just DM me in my Instagram. I'll be more than happy to help anybody out. 0% listing on selling your home, and up to 50% commission rebate on selling or buying your next home. Link in the description below. So after that, then we have the bank statement loan. Bank statement loan, this is another one. If you're going to go ahead and make a little bit of money that you don't want Uncle Sam to know about, you don't want anybody else to know about, maybe you don't want the feds to know about, I don't give a damn what you do, or maybe you're popping the poll, or maybe you're cash business. I don't know what it is that you're claiming or what it is that you don't want to claim, but this is a mortgage product for those types of people. Bank statement loans, we don't care about your W-2s. We don't care about your taxes. We don't care about your pay stubs. I don't give a damn who you're working for or whatever it is. I qualify you based off of the money that's coming into your bank. That's it. Nothing more. Well, then your credit too. Your credit also helps a lot too. But majority of the income qualifying paperwork that we need is going to be only directly with your bank statement. Now these, as I go along, these are all going to be like non-qualified mortgage products, but it's good to know. Adjustable rate mortgage. You have 10 ones, 5 ones, 7 ones. Now we have 7 sixes, 7 5 sixes. We have 10 sixes. These are, so adjustable rate mortgages are going to be interest only for the allotted period of time. So if you, let's say for instance, I take a 10-1, okay? And you could kind of like plug and play it with the rest of them. So a 10-1 would just mean that I am gonna hold interest only 10 years only. After that 10 years is concluded and that 10 years is over, now I am gonna go to principal and interest. Now there are loan products where you can pay the principal and interest in the 10 years, but for the sake of argument, let's just go ahead and do the most common one. Then what happens after that, every single year, according to the cap on your product, now the cap will be like, let's say you have a 10-1-1, right? So that means that each year your interest cannot increase more than 1%. But that'll be the third one, right? The second one is going to be how often are you able to go, how often your servicer, the person who's servicing your loan, is allowed to go ahead and increase it. So 10 years, fixed interest only, 1, which would be the 1 year every time it gets adjusted, then the 1 at the end of it will be, okay, they could only go up once every year, or 1% every single year. So let's say you bought in at an adjustable rate mortgage at like 4%, and then holy shit, the world's coming to an end. Everything is going down Schitt's Creek. Well, you'll be all right. You'll be fine. If you bought in at 5 and it's like at 10, well, this year is going to be at 6, then the following year will be at 7, then the following will be at 8, and then, so on and so forth. That's an adjustable rate mortgage. We already talked about jumbo. Jumbo doesn't have a limit. You are 100% going to be paying 20% down. You're buying a 2 or anything over $1 million, and that's the loan limits or loan amounts, $1 million and above. Just keep it like that. $1 million and above, you are going to be paying at least 20%. You are definitely paying at 20% down. Your income is going to be very, very, very high. Your DTI is going to be very low, which is your debt to income ratio. And your front end ratios and your back end ratios as far as your total income. Like your front end ratio, if you ever hear me talk about front end ratio, I don't know if I said it already, but your front end ratio is just going to be your housing expense. Your back end ratio is going to be your all encompassing, like everything that you have to put in, that'll be your back end ratio. Then we did the high balance. Down payment assistance, okay? I know I already said it. Now, down payment assistance can correlate with any of them. I told you that there's a forgivable and a non-forgivable. Down payment assistance, non-forgivable. Down payment grant, forgivable. That is a grant that is going to be for you and you only. You take it if you qualify. Now, there's something that's called BMR properties, okay? BMR properties are these properties that you could go ahead and qualify you based off of your income. Now, for San Francisco, for instance, 116,000 and some change is considered low income. So if you make less than 116,000 or 120,000, somewhere around there, don't quote me, I haven't looked at it in a long time because I obviously don't do BMR properties. It's government, like state government and county government run programs, and majority of the times it's city run programs, where you look at your city, right? Like let's say, for instance, wherever you live, you could go BMR properties, you could put in that city limit. It'll tell you all the listings that you have. Now, a lot of those have assistance programs for you. Now, if you are not on the BMR property and you're just like myself, right? We're just trying to buy a house and do whatever it is. There's other programs to where they come in and they go out, they come in and go out. So I'm not going to give you a specific one because they're always interchangeable. They're always like, one is called one thing one day and then another one is called another thing the other day. But there's one that stayed along for quite some time, which is a HEROES program for law enforcement, medical people, things like that. There's grants for those. But you can get down payment grants to go in and help with your down payment, and you don't have to pay those at all. You don't have to touch them. Forget about it, right? It doesn't even matter. Thank you for the money. I really appreciate it. I'm going to go buy my nice little house. But definitely look into that BMR thing. BMRs are really, really big. I make no money off of them. I honestly, I've never done one before. I should probably check to see if I'm able to do that. I'll have to go and talk to somebody at county. But I know that these are programs available. There are little caveats to that. You have to go take educational programs to it. You have to go and talk to the city. There's an application that you have to fill out. I don't know every last detail on it, but look it up and see what your county requires. So that'll be the down payment and down payment assistance program. Now here's a program that you don't know, and majority of people don't know about it. It is called a lease to own program. So you want a house. You don't know if you like the place, but you want the house. Well, that's where you get this guy come in, okay? So a lease to own program, okay? A lease to own program is just that. I am going to lease it. It's going to be up to 2 years. After your 2 years has come up, now you do have to pay your principal, interest, taxes, and insurance. That is going to be all in the lease to own. But the good thing is that if in 2 years comes up and you're just like, you know what, I leased it, I don't want to be part of this anymore, you could just walk away. And then we will have to go and re-rent it out to somebody else, or we'll sell it, or whatever it is that we do, depending on what our investors talk about. But you are able to do that. And then what happens is that if you do end up deciding that you want to buy it and you say, you know what, I really like this property, or maybe you need a couple of years for something to fall off. Let's say you have a bankruptcy, but you need money now. Well, we still qualify you based off FHA guidelines, which are pretty stringent. FHA requires a lot, especially when it comes to the property itself. There is no loan program out there that is more stringent on single family purchases than FHA loans. There just isn't. FHA requires a lot. We hate getting appraisals back from FHA appraisers. It sucks because we always know that there's going to be something wrong. Now, FHA is all dialed in, lease to own, but yeah, that's how it works. You get to do it, and then from the 2 years concludes. Once the 2 years concludes, and if you want to buy it, cool. If you don't want to buy it, wash your hands, say forget about it. I'm leaving. I don't have to worry about this. Adios, amigos. Interest-only loans. Now, these are majority of the time for investors because we get to go up to 40 years, which lowers your total overhead. You could go interest-only loans for 30 years, 40 years. 40 years is usually on investment properties, but you could go up to 30 years interest only. Now, there are balloon payments at the end of it, which is also known as an alienation clause within your contract, which is going to go ahead and say, you know what, you have to pay us back. You know that the interest is going to be due this much, and you could go ahead and go from there, right? I want to pay it all at the end. If that's what you decide to do, that's what you decide to do. You could always capitalize on the appreciation over time, which some people do that. You know, it's all case by case scenario, and that's going to be your interest only. Then another loan product we do, reverse mortgages. Now listen, there's a thing that's saying that everybody thinks, oh, the bank wants to take your money from you, and you don't do a reverse mortgage and revert. No, man, you could refinance out of it. You could have an heir in your reverse mortgage. You could have whatever your little heart desires as long as the whole is whole at the end. And what do I mean by that? That means that if the amount that you have borrowed, whether it's a lump sum, because a reverse mortgage you could either take monthly or you could take a lump sum right out the gate. If all of that plus the fees that are associated with any type of refinancing out there, whether origination, appraisal, credit, all that other stuff, as long as that stuff's paid back, you get to still keep your house. Doesn't make a difference. Or you could refinance out of the reverse mortgage. You could always do that too. And it'll be for the amount that you went ahead and pulled out. That doesn't mean that we're going to take your house away from you, but that's going to be a reverse mortgage. Somebody's going to go ahead and take the money and they're going to pay your interest principal on your house, and you are scot-free. You get to still live in your house. You don't get to go anywhere. And yes, I know majority of the time that it's for like older people, but it's a reverse mortgage. If you need it, you need it, right? Number, whatever it is. We got interest only. Now, here's something that's called a hard money loan, okay? A hard money loan is for people who need money to go ahead and, let's say, you found a distressed property, right? The distressed property, like let's say you found something that a bunch of people just beat the shit out of this, or is going into like foreclosure, whatever it is. Like this has to be a pretty crappy property for you, or you're just trying to rehab a property to go because you need short-term capital funds. Now, what that is that hard money, it is always going to be at a premium price. It's going to be expensive, okay? That's pretty much what I'm trying to say. Premium price, who am I? I don't know, I'm such an asshole. But it just means that you're going to go ahead and pay a premium on that hard money that you're pulling out. Now, these are usually like, between 6 to 24 month loans, depending on how big of a project you're undertaking and what your timeline is to go ahead and rehab that property. But hard money loans are available for people who need money really, really, really quick. So as long as the numbers make sense, then you're good. And then the great thing about hard money is that once you become a seasoned investor, and once you have that relationship established that you're able to do it once, then you could do it again. Then that trust falls in and it makes the process so much easier. Like I have a guy that we deal with, a hard money lender. He just makes a call. He says, Omar, I need $2.5 million. I call in and I'm like, I need a loan for $2.5 million. Of course, we have his file on already. They're like, who is it? And I'm like, it's this person. They're like, done deal. We'll have it over in about 7 days. Just send the contract on over, because you always need your lawyers to go ahead and look over it. You need a timeline contract between the lawyer and the construction company, and when the completion date is. And that's it. Hard money is not bad, but do not think that you want to stay long with the hard money if you don't know what you're doing. If you don't know what you're doing in the world of investment, don't pretend like you do. Ask for help. Ask somebody to help you out with it. Somebody knows what they're doing. Talk to a lawyer. Get contracts signed. Don't pretend like you know what you don't know. Words to live by. Then the next one is going to be a bridge loan. A bridge loan is a loan to go ahead and go from one property. Like, let's say I need down payment money from my property here because I don't have enough to go ahead and cover it for the down payment of this. Well, that's when you get a bridge loan. A bridge loan, or you could go ahead and also get a home equity line of credit, but a bridge loan will go ahead and allow you to go ahead and get that money, take it, purchase the new property because you want to go ahead and get into contract with that new property, and then when this closes, that money goes back to pay off the bridge loan, and the remaining will go ahead and go to you, which is a really, really, really smart way to go ahead and avoid capital gains. If you don't know what it is, look it up, or just DM me. We could talk about it. Or I just make another video about it. Well, I'm such an idiot. Might as well make something out of this. But bridge loans, because what happens is capital gains is how much money you take in. Now, capital gains gets taxed over, like in California here. I don't know about every single state. Maybe it is the same in every single state. I'm not sure, but I just know California. That's all I know in my life is California and New York. But I try to forget about it because that's where I was born and raised, in New York. I hate that place. Forget that place. But California, it's $250,000 per person. Married couple, it's $500,000. Let's say you exceed that $250,000. Go ahead and take a bridge loan out. A bridge loan, because then your capital that you're not taking that capital in. Now let's say you're at like $300,000. We'll take a bridge loan for $75,000. Because the taxable income and the points versus how much you're going to be making off of that $75,000, there's a big drastic difference, right? The taxes on capital gains is huge. It's massive. So if you're going to lose half of that right there, refinance, or not refinance, get a bridge loan. Once you get a bridge loan, then you're going to go ahead and dump that into, just to assist you, even if you don't need it, assist you to get a new property. Doesn't show that you're paying off it doesn't show that you make capital gains, and then you can go and go from there. I wonder if you could get arrested for saying this stuff. No, you can't, because this is what everybody does, right? I'm just telling you out loud. Oh boy. All right. Asset depletion, okay? Asset depletion. You got a bunch of properties. You got a bunch of, let's say, accounts, stock, any stock holdings that you might have that maybe you have some dividends coming in and it's compounding or whatever it is. Asset depletion is just that. It is taking the total assets that you have and it is depleting it to go ahead and see, does this cover the amortization of any mortgaging product over whatever length period of time that you are planning on getting a mortgage, whether it's 15 years, 30 years, whatever it is. Asset depletion. We're using your total assets, we're dividing it to see if that's going to go ahead and cover in case of something happens. We need to go ahead and make sure that we could deplete all the assets that you have. We could sell it off to cover the amount of mortgage that you're looking for. Then we have, let's see, we got your 3-2-1 buy down. I don't like the 3-2-1 buy down. It's a new thing now. It's a new kid on the block. It's this freaking craze. Everybody wants to do a 3-2-1 buy down. Here's a 3-2-1 buy down in a nutshell. Interest rates are at 6%. I'm going to go ahead and get you in at 3%. Next year is going to be at 4%. Year after that, it's going to be at 5%. So then it's going to go, or my math is all jacked up. You're going to be at 4, 5, 6%, right? And then after the third year. Now, the big question is what happens to the total interest that you didn't pay previous 3 years? It's not like it goes anywhere. You're still paying on the 6%, but we're qualifying you based off of the first year. So we're qualifying you based off of 4% rather than 6% just to get you into the place. That's why I don't like it. I want apples to apples. I want you to qualify based off of whatever it is that you have, not whatever it is that we are we're not hedging out 3% for 10 years. We're not doing that. So that's why I don't like it. Majority of the time now the market is shifting right now. You could get the seller to go ahead and pay for that, or you could go ahead and get your real estate agent to go ahead and pay for that. That'd be an amazing thing. They could do it by docking their commission. You could get both of the agents to go ahead and do that, or you could pay for it, and that's never ever good, which you're not supposed to pay for it. Now, you're not supposed to pay for it, but in this market, it's so stupid right now that people are just doing stupid things. But let's get on with the next one. The next one is going to be the Foreign National Program. The Foreign National Program is that loan product. So get this, okay? We don't need you to be in the United States for this program. Like, let's say, for instance, you know somebody that wants to go ahead and buy a house here in America, right? They're not in America, and they want to invest. That's one part. Let's say you don't have any paperwork, or you don't have anything, or you have an ITIN or whatever it is. This foreign national product, well, then you could buy a primary residence here with just those basic requirements. It's 20% down. Some cases it might be a little bit higher depending on the circumstances where you're going on. But just this is, now I've done enough of these to go ahead and know exactly what I'm doing. I tell myself this every single day. But the Foreign National Program, you're going to need at least one bank account. As long as you have that one bank account, you're good. Because this is a hiccup we come into every single time. We always get this goddamn bank account thing every single time, because you don't want to go too far deep into like the foreign national. Like, I have zero accountability for anything. Now, like when I mean like, we can't find you, right? We can't connect any dots with you at all. Like, I can't connect you to your own country, let alone anything. We have to have some semblance of connection. But you could go ahead and buy primary residence on this foreign national product. This means you don't have a social. Maybe you're in between some things. I don't know what it is. Everybody's situation is different for a primary residence. For non-primary residence, we just want to go ahead and make sure you have the money down, and then we go ahead and qualify you based off of one account. Now, that one account, that one bank account, is enough for us to go ahead and, get you all dialed in, because now we have an association between who we're giving money to, right? We know that a depository institution, they went ahead and did exactly what they're supposed to do, and then we got you all dialed in. There's one little thing with that one is if you are foreign national and you cannot have any ties with businesses here in the United States other than what you are purchasing. Like, you can't be like a board member on an American-built corporation or anything like that, okay? Just so you know, you can't have any of those ties, because majority of people who are investing here, you're pretty well off. You're not doing, we could potentially do it if you have a W-2 over there, which will be easier to connect. We could do a 1+1, but having direct connections with a corporation in America, it's a big no-no. You cannot do this. Now, this falls under kind of the same thing as what's called a DACA loan. The DACA loan is, back in the day, President Barack Obama, he went ahead and did this thing. Like, let's say, for instance, and since I'm close to the border here in California, I live in Los Angeles, the Mexican-American community is very, very big here. This, for us, now I can't speak for the rest of it. I don't know if Canada kind of falls under the same thing. But here, for us, let's say somebody came into America, right? Came into America with their kid. They're like 2-3 years old or whatever it is, which is a terrible way to escape poverty and try to make a better life for yourself. It sucks, but there are avenues for people in the process of seeking some sort of asylum. They're trying to go ahead and get their life back together, but their parents didn't do what they were supposed to do. So let's say you're at 2 years old, your parents bring you to America, they've been working, they've been busting their ass the whole time. Well, you shouldn't have to suffer because of that, because now, even though you went to school, you did all of this in America, you might have even served in the military, which if you did, thank you for your service. I'm a veteran myself. So, you could go pretty far without having actual citizenship here in America. Well, This program, this DACA program, is mainly built for those people. Those people that you had nothing to do with how you came here. You have nothing to do with anything in between that. But now you want to go out and buy your house. You are going to have to make steps into go ahead and getting naturalized. But in the intermediary, you have this DACA program, which is also part of a piggyback of the NPRA program, they're all kind of all the same. If you got the foreign national, the DACA program, the NPRA program, they're all like the same thing. You're not a citizen, but you're still able to go ahead and get a loan to go ahead and buy a house. Because majority of people, that's what they want to do. They just want to go ahead. They want to live their life comfortably, go do your couple of vacations a year. You want to buy a house. So who are we to say that you cannot go buy a house? But do get naturalized. Go do all that stuff. Get yourself a real social. Go get yourself all of that good stuff. It's really important because I've seen so much bullshit that's happened. Like there was this young lady, and I apologize, I forgot her name. This young lady, she went to school here in America. She graduated from college here. She went to the military. She served our country, and they still deported her. Like, at what point do you say, okay, this is fucking stupid, okay? I get it. If you come over here illegally and then we pick you up and then you got to go back, I don't believe in coming here illegally. You got to go seek asylum, go do all of that stuff. You need to go ahead and do your dues. But this young lady did her dues. She went way far and above doing her dues. She came in, she was brought here to America and served in the military. I think that's an automatic. If you served and you fought for this country, come on now. Like, idiocy is idiocy. Stupid is stupid. If you went to school here, you went to college here, you served in the military, you built your life there, and then all of a sudden you get deported. Like, what asshole made this loophole? Forget about it. Which, by all means, if you are illegal here, go. My parents did it. It's not easy, but once you start the process, you get to stay. You don't go anywhere. It's not like we got lines of people like putting people in cages, which by all means, that was another thing that Obama did. Obama was the reason why kids at the border are put in cages, which is fucking disgusting. It's absolutely, like, to think about my kids being put into cages, it boils my goddamn blood. That should not be the case. You're able to separate the kids from their parents because you are detained if you came in here without seeking asylum and you crossed it illegally. Well, you're setting yourself up. You know the risks, you know the pros, you know the cons. I have no political bias on anything. Please don't take this as me being negative in any way, shape, or form. But we had it beforehand where kids were on the kid side, adults were on the adult side. The fuck these goddamn cages come into play? Why? What's the point of it? Whatever. All DOC portfolio loans, okay? Alternative DOC portfolio loans. Now, these are mainly for people who, like, let's say you have foreclosures, right? You have a foreclosure, you filed for bankruptcy. Now, there's a 7-year waiting period time. There's 3 on some of them. There's different waiting periods on different types of bankruptcies. But as a whole, if you file for bankruptcy, it's a 7-year waiting period, okay? Now, an alternative DOC means we don't have to wait for it. An alternative DOC just means that you go ahead and instead of waiting your 7 years to go ahead and refinance or a short sale or bankruptcy or anything like that. Now, bankruptcy only has to be seasoned for 2 years. That means that you just have to be, from the date your bankruptcy that thing was stamped by the judge and said you are bankrupt, you just have to wait 2 years. 1 year if you went into foreclosure. That is another alternative route. And then the last one that I'm going to do, and I probably missed it, but I am so tired that this video is taking so long, but hopefully you learned a little bit here and there. It's called the blanket mortgage. Did I do HELOC? HELOC, home equity line of credit. You have equity inside of your house. You want to go ahead and pull some money out. You got 2 ways. You could do a lump sum, or you could go ahead and take it out like as a big-ass credit card. That was one I didn't do, okay? So this is for people who own homes. A home equity line of credit, you could do a HELOC. HELOC. I have equity in my house. I want to go ahead and get a home equity line of credit, which is like a big ass credit card. I want $500,000, God damn it. They give you $500,000. That doesn't mean that they're going to give you the $500,000 thing. It's like you get a checkbook, you get to write out checks, and you get to put it against it. Now this home equity line of credit is interest only for 10 years. Once that 10 years is up, now this is also known as a draw period, where you're able to pull money from this home equity line of credit. Once that draw period is over, now you go fully amortized. That means you're paying principal and interest over the next 20 years until it's fully paid off. Home equity line of credit. And then the last one for investors is a blanket mortgage. In essence, you got a bunch of different properties and you want to go ahead and take one mortgage out on all of them. There are some stipulations that you want to go ahead and make sure you look at. Blanket mortgages with whoever, sometimes when you do it, will not allow you to sell a single property. It will be blanketed and encumbered on all of them, which means that you have to go out and sell all of them at once. Make sure you do not do that. Make sure there is an addendum inside of your product, or ask your mortgage broker and ask whoever you're dealing with that the loan product that you're doing is going to go ahead and allow you to go ahead and, let's say you have 30 properties and you want to go ahead and chunk off one of them. You want to sell one of them for whatever. Well, you get to go ahead and do that. Just allow that to happen. But that's every single mortgaging product. I'm sure I missed a couple of them, but it's like, like a 45-minute video or something like that? Hopefully you guys liked it. Hopefully I interested you with a couple of tangents. If you liked it, like, subscribe, comment. Up to 50% commission rebate, 0% listing on selling your current home or any mortgage assistance. Link in the description below. Till next video, guys, I am exhausted. I am tired. I didn't know that was going to be that difficult. Till next video, guys, I really appreciate you watching. Peace. By the way, I'm not political. I apologize if I went to that way. I just, certain things just piss people off, okay? I'm not saying Obama's a bad guy. I'm not saying anybody's a bad guy. I honestly could give two shits about politics. They're all assholes at the end of the day anyway. The presidency is not even like a real job. It's not even a real thing. You have so many other people that tell you what to do. So I don't care. Don't care. Sorry. Till next video.